What if I told you banks don't make most of their money by simply keeping your savings safe? In fact, the money sitting in your bank account may be helping the bank earn far more than you realize. Every day, millions of people deposit money, swipe debit cards, take out loans, and pay monthly fees. Most never stop to ask one important question: how do banks actually make money? The answer is surprisingly simple, yet incredibly powerful. Banks are some of the most profitable businesses in the world, not because they print money, but because they understand how money moves. In this video, we'll uncover how banks really make money, the different ways they earn billions every year, and the financial lessons ordinary people can learn from their business model. Let's begin.
Most people think they're simply storing money when they deposit it into a bank. But from the bank's perspective, your deposit is also a source of funding. Banks use deposits from thousands or even millions of customers to support lending and other banking activities. Of course, banks must also keep required reserves, follow financial regulations, and maintain enough liquidity to meet customer withdrawals. Instead of letting money sit idle, banks put much of it to work. That's the foundation of modern banking. The biggest way banks earn money is through lending. They provide loans for homes, cars, businesses, education, and personal expenses. When someone borrows money, they repay the original amount, plus interest. That interest is one of the bank's primary sources of income. A single loan may generate income over many years. Multiply that by millions of customers, and the numbers become enormous.
Here's where the business model becomes even more interesting. Banks often pay customers interest on certain savings accounts. At the same time, they charge borrowers a higher interest rate on loans. The difference between the interest they receive and the interest they pay is often called the net interest margin. This spread is one of the core ways many banks generate profits. The larger and more efficiently manage the lending business, the greater the potential earnings. Loans aren't the only source of income. Banks also earn money from various service fees. These may include monthly account fees, ATM fees, overdraft fees, foreign transaction fees, wire transfer fees, card replacement fees. Each fee might seem small, but across millions of customers, they can add up to substantial revenue. Every time you use a debit or credit card, several financial institutions may be involved in processing the payment. Banks can earn revenue through card-related services, depending on the type of transaction, their role in the payment network, and agreements with merchants and card networks. Millions of transactions happen every day. Small amounts earned from each one can become significant over time.
Banks don't only serve individuals. They also work with businesses. They provide business loans, cash management services, payment processing, foreign exchange, investment and advisory services. Large companies may pay substantial fees for these services. For many banks, business customers represent an important source of long-term revenue. Making loans always involves risk. Some borrowers may struggle to repay. That's why banks carefully evaluate income, credit history, debt levels, business performance, and other financial information. Good risk management helps protect both the bank and the broader financial system. The truth is, banks don't become successful simply by holding money. They earn income by providing financial services, making loans, managing risk, processing payments, and serving both individuals and businesses. Understanding how banks make money can also help you become smarter with your own finances. Because once you understand how money moves, you can make better decisions about saving, borrowing, investing, and building long-term wealth. If you enjoyed this video, subscribe for more finance, investing, and wealth-building content. And let us know in the comments, what surprised you the most about how banks really make money?